Amazon reported their Q3 earnings. We'll come in here, take a look at the results. Shares are popping in the after hours, nearly 5.5%. We'll come in here, also take a look at the stock chart as always, see if this bump up in Amazon can be bought. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. We are on the road to 600 subscribers and your support would mean a lot. Shares of Amazon up nearly 40% over the past year to date, but over the past 1 year up just 4%. Now tomorrow, if these gains in the after hours hold, shares will be likely close to up 10% over the past 1 year, as in the after hours I see shares of Amazon trading near $125 per share. The results came in from their Q3 report and EPS coming in at 94 cents. The street had expectations closer to 58 cents, so a massive beat on that bottom line. Amazon's profits absolutely soaring, revenues also coming in higher than anticipated by nearly $2 billion, as revenues were coming in at $143.1 billion. Expectations were at just $141 billion. Now the all-important Amazon Web Services, that came in slightly under expectations at just $23.1 billion. Expectations were at $23.2 billion, but the all-important third of the three-headed monster, which is advertising over at Amazon, that came in at $12.1 billion. Expectations were at $11.6 billion. So revenues were up nearly 13% in this quarter. And then in terms of forward-looking Q4 guidance, which is the holiday quarter for Amazon, seasonally their largest quarter, expectations from Amazon for this Q4 are at $160 to $167 billion on that top line. Wall Street had expectations closer to $166.6 billion, so near the top end of this range. Certainly, I think Wall Street had their Q4 seasonally very, very strong. Amazon did come in near the lower end of that guidance. I think if you take the midpoint at $163.5 billion, that would represent 10%, nearly 9.6% growth on that top line. So still consider the fact that this is a $150, now close to $160 billion business in each quarter. Yeah, that is certainly difficult to grow, but Amazon's still doing a nice job growing top lines at low double digits. Now, Amazon did say it has been in cost-cutting mode, and we know that as the company has laid off close to 27,000 employees since last fall, and Andy Jassy, who succeeded Jeff Bezos, said those belt-tightening efforts are continuing to bear fruit, and that is shown in the results. We'll take a look into that. But the all-important e-commerce business over in North America did cross a barrier and is now profitable. You see in the last year, Q3, North America e-commerce, which is Amazon.com, that was losing $412 million in operating income. And so even on $78 billion of sales, it's a very, very low margin business, as Amazon was losing money same time last year. Now they've turned over to a $4.3 billion profit on that line. And so certainly cost cutting over here on their e-commerce side, on the North America side, certainly proving to be valuable. And on the international side, it looks like Amazon is right around the corner, maybe a few more quarters, and they will start printing operating profits instead of operating losses on that international e-commerce. They're very, very close, as they lost just $95 million in this quarter. Same time last year, they were losing close to $2.5 billion. So e-commerce overall moving in the right direction. You see North America turned profitable and international is also very close. Now the all-important cash cow over at AWS continues to just chug along. You see they printed operating incomes nearly $7 billion. Last year we were close to $5.4 billion. And so AWS continuing to prove to be very strong over at Amazon. Now, they did say advertising continues to be a bright spot for Amazon, as Amazon's ad revenue soared 26% from a year ago. We took a look at Google a few days ago. Their ad revenue growth was at 9%, and Facebook's ad growth was at 23%. So ad revenue, being a big business for Amazon all of a sudden, is growing at a clip of 26%. That's very, very good to see. The other important thing is AWS grew at 12%. We took a look at Google again a few days ago. Their cloud growth was at close to 23%, and then Microsoft's Azure grew at nearly 28%. And so comparatively, AWS growing at just 12% might seem low, but the stock doesn't care about that, considering how steeply profits over at Amazon have risen. And I think over the past week, as Google and Microsoft and even Facebook reported earnings, I think those sent shares of Amazon lower. And so investors kind of digesting the growth over at AWS before the results even came out. I think this was sort of expected, and AWS being a nearly $23 billion business, growing at 12%, still a very, very strong clip over at Amazon. Now we see total net sales coming in at $143 billion. That was up nearly $17 billion from same time last year. We have the 3 months ended in the left-hand column. Now going through these results very quickly, we see cost of sales and fulfillment and tech infrastructure was all up just slightly, and then Amazon doing a very nice job controlling costs on sales and marketing and general and administrative. And so you have your sales rising by nearly 17 billion, your operating expenses rising by just 7 billion. You do the math on that, and yes, your operating income will rise by nearly 9 to 10 billion dollars. So operating income over at Amazon coming in at $11.2 billion. Last year we were at just $2.5 billion. Again, the cost cuts at Amazon in sales and marketing, in G&A, and the slowdown in the growth of operating expenses on the cost of sales side, on the fulfillment side, that is certainly proving to help Amazon's bottom line. And speaking of bottom line, net income coming in at $9.8 billion. Last year we were at $2.8 billion. Again, bolstering on nearly $7 billion onto their net income. And that turned your diluted EPS up from 28 cents same time last year all the way up to 94 cents. Again, Wall Street expectations were closer to 60 cents on that EPS side in this most recent quarter. For next quarter, expectations are at 66 cents. So guys, Amazon just beat EPS estimates and posted a quarter of 94 cents on their EPS side. Yeah, next quarter, I can see them easily doing over $1, maybe close to $1.10 on that EPS side. And so even you look at it from the upcoming few years, on that earnings growth, Amazon is still expected to post nearly 44% growth on that EPS side. Certainly, if they are blowing EPS numbers out of the water, if their cost cutting will continue, which Andy Jassy did say that belt tightening over at Amazon will certainly continue, yeah, these EPS estimates will likely need to go higher. Even on that top line growth, they are still expected to post low double digits growth, which is staggering for a company that's doing $143 billion in 3 months. Guys, that's $143 billion in 3 months, close to $400 billion in just 9 months. Absolutely insane. You do have shares, weighted average shares outstanding at Amazon still rising, but again, not a huge amount over the past year. Not a big deal considering the performance of the stock has been very, very strong. Now taking a look at the cash flows over at Amazon, you bring down that net income number of $9.8 billion for these 3 months ended. On a 12 months ended basis, you have nearly $20 billion of net income. This is the rightmost column. And then we have 3 months ended 2022 on the leftmost column. You get to add back some depreciation, a good amount of depreciation at Amazon. These are the warehouses and technology over at Amazon. It's decently expensive, and so depreciation does kind of tack onto their cash flows. So they have net cash provided by operating activities close to $21.2 billion. That was up from $11.4 billion same time last year. Now Amazon again does have to spend a fair bit on investing in property and plant and equipment, and so Amazon still having a fair amount of CapEx to do in that segment, and so they use nearly $12.5 billion. It is down from a year ago, and so that's fairly impressive that Amazon, again, controlling costs on their property, plant, and equipment purchasing down from a year ago where it was closer to $16.4 billion. Now, in terms of financing activities, Amazon didn't purchase any common stock in this most recent quarter. You see, last year they were purchasing nearly $6 billion worth of common stock. That was through the 12 months ended in 2022. That is probably a good thing considering a year ago in December, yeah, the stock was closer to $80 a share. And so Amazon doing a majority of their share repurchases at a much lower price. And so them holding back on repurchasing their common stock now is probably a good thing and good decision made by management. They did pay off nearly $8 billion of short-term debt in this most recent quarter, and all things considered, they used nearly all of their operating cash flows of $21 billion in investing back into themselves or repayment of debt. And so Amazon, again, very efficient with their money. They're either investing in themselves or returning the money to shareholders in the form of paying down their debt and improving their balance sheet. Now, in terms of their balance sheet, overall looks very strong, not much to worry about. They do have close to $147 billion worth of current assets. Sorry, that was last December. Now those current assets sitting close to $143. Again, not a huge decline in those current assets. You have total assets at over $486 billion. Yeah, having total assets of close to $500 billion, that is certainly impressive at Amazon. They do have a fair amount of liabilities at nearly $145 billion. And so a current ratio are really around 1. Not great, but again, nothing to be overly concerned about, considering that this company is just now ramping to profitability, and in a significant way. You see profits are expected to rise at a rapid clip over the upcoming quarters. They do still have nearly $61 billion worth of long-term debt, but you see from a year ago, that is down by nearly $6 to $7 billion. That is Amazon repaying off their long-term debt. Moving on to the technicals, I have a 5-year chart over at Amazon pulled up, and it made this monster rally higher during COVID and then sold off into late last year. Now we are sitting closer to $125 per share in the after hours. I'll bring this into a closer timeline. You see over the past 1 year, this has been making a steady elevator ride higher until it broke that trend back in, I'd say, near the end of September, where it got rejected at close to $143 per share. And in the very short term, you can consider this to be a lower lows pattern. And so I wouldn't be surprised if Amazon does come up here close to $127 and maybe sees another reversal and heads lower. Considering the news over at the QQQs and overall NASDAQ has turned pretty negative, the Qs have entered correction territory. And so I can see Amazon continuing to head lower, even though these results are absolutely stellar. Look, there's nothing wrong with these numbers that Amazon just posted. They posted a fantastic quarter. They're guiding for another fantastic quarter. Everything is humming just right along at Amazon. Cost controls are coming into effect, and then advertising is still growing at a rapid clip over at Amazon. And so there's nothing in the fundamentals that suggests Amazon should head lower, but the near-term technical pattern is a set of lower highs, and so you could anticipate Amazon coming up here and then heading lower. Now, if it does break out of this sort of downtrending channel, then yeah, absolutely, Amazon can come up here, test these levels at nearly $132 per share. Certainly that's a bit higher than where we are in the after hours, nearly 6% higher, and then perhaps even it could even come back and test these highs close to $143 per share. Certainly, I think the risk reward at Amazon at this point isn't great. I mean, there's no reason not to come in here and buy shares of Amazon apart from just the valuation. So you still have an expensive forward-looking valuation on Amazon. Now, they are anticipated to grow their bottom line at a rapid clip over the next few years. And so, yeah, they do demand a premium on that price to earnings multiple. But again, the valuation at this point isn't great. The risk reward isn't absolutely screaming out to me to be a buy for Amazon. But again, if it heads lower from this technical pattern, I think down closer to $110 per share, that is where it would make a lot more sense for Amazon. And then anytime really you can get this stock at close to $100 per share, yeah, that would be a screaming buy in terms of a long-term buy and hold. Even in the short term, I think if Amazon comes down to $100, if the NASDAQ continues to see weakness near the end of the year, yeah, I think at $100, this is a no-brainer buy. I think you can come in here and maybe pick up 1 or 2 shares if you are underweight Amazon. Look, with Amazon, you get not only cloud and the e-commerce business, you again get a rapidly growing advertising business, you get Twitch, you get a grocery business, you even get Amazon expanding into the healthcare industry, you get robotics, you get a ton when you come in here and pick up shares of Amazon. So from a long-term perspective, look, I think if Amazon continues to trade sideways in the near future, I think you can come in here and easily accumulate shares of Amazon. Not overly cheap when you look at it from a traditional price to earnings multiple, but I think you have to come in here and analyze the earnings growth that will be coming in the near future over at Amazon. That was my take on Amazon.com. Very steady quarter, very strong business, guided for a relatively strong Q4 in the holiday season, and we'll continue to look forward to that growth in advertising and cloud over at Amazon. Let me know your thoughts on Amazon.com in the comments below. Do you think coming here and buying at 125 makes sense? As always, thanks so much for listening, and I'll catch you guys in the next video.